To our final session for the conference today, everyone. Now, I have been asked by one of your colleagues at the conference here. No, not Shane, wasn't Shane. It was actually someone different, Shane, causing problems today, which is quite, no, not really. But the question that was asked of me was, Chrissy, can you get everyone to put their hands up if they have an EV, just to see how many of you actually do have an EV in the room, because we're banging on about them so much. One? It's a kid. So what do you do to afford to a kid's EV? What do you mean? You've bought your child an EV, Peter?
Yeah, it's just a battery-powered car, and he's 8, so he thinks it's a car in his world.
Give that back to me. Like, wait, Shane, you're going to add anything to add? He's got a V8. No, that's not what. Well, that's it. We're talking about it, and we're all prepared to buy into stuff. And yeah, we haven't got one ourselves. Anyone got an intention of buying one in the next few years? Your daughter's got one?
Yeah, Tesla.
Are you helping your daughter out in any way, shape, or form? Is she an independently wealthy young woman?
She's got her own business and the taxpayer paid for it.
Fabulous, wonderful. Actually, I'll tell you who I should be speaking to out there is the people at Cooper, because they had some great tax ideas for me out there to minimise my tax, which I hadn't thought of. And I say that in all honesty. I did get the chocolate from Cooper, and I also got the lowdown on the bottle of Grange. And if you're not in the room at the start of the second last talk today, you have no chance of getting that Grange. I will keep pulling it out of the container until we have a winner. Are we all in agreement with that, those of us that are here now? Fabulous. So I won't even mention it until that second last talk. Is that a deal? All right. Start of the last session for our conference today, ladies and gentlemen, and Dreadnought Resources is coming up to join us. Dreadnought is highly active. They're West Australian. They're a focused junior exploration company. They've got a really busy year ahead exploring gold, nickel, and their copper discoveries. The company is managed by this fellow. He's a geologist, Dean Tuck. Were you here yesterday, Dean? No, obviously not. No. We had soft geologists yesterday, and today it's all the hard geologists. My mind automatically went, sorry, back to that. The company is managed by geologist Dean Tuck, his team of exceptional explorationists. They're backed by an even more exceptional board with plenty of skin in the game. Would you please make him welcome to start our final session today?
Thank you all for joining us this afternoon. There's been some fantastic talks today. If you're hoping for another talk about the crystal ball future of critical metals and their rising demand and what I think the prices are going to do, then I'm going to disappoint all of you. Instead, I'm going to talk about our projects that we have and talk about what we're going to be doing on them, because we are exploring. We are an active exploration company, and our job is not to predict the market. Our job is to actually find the resources and the metals that the world needs for the future. So that's all going to be the cusp of our talk today, and look forward to giving that to you. If I do struggle a bit, I apologize. I have my second Pfizer jab this morning. So if I start tweaking a little bit, please forgive me. I am proud to say that 100% of Dreadnought has been vaccinated, so that's always good. So Dreadnought Exploration, 2 years ago, we were a 3 to 5 mil market cap company. Today, we're sitting just shy of 100 mil. Been around for just over 2 years. Like I said, we're a very active exploration company, greenfields exploration. We've gone from doing the arm wavy. We think there's great potential out here, and now we're into a position where we've actually delivered significant intercepts, and we'll be chasing those up, and I'll be talking about what we've achieved, and more importantly, what are we going to be doing for the rest of this year and then 12 months going forward. Spectacular board, as we talked about before, skin in the game. We have 17% of the company, 1.3 mil of our own cash invested. We are strongly aligned with shareholders. We live on the front end of the Lassonde curve. We are here to find something, take that to resource. That's the first crystallization event of the mineral cycle. And that's where you'll see us excel, hopefully. Certainly what we try to excel at. We have 3 main projects up in the Kimberleys where we're working at the moment, where we've had some big success. Mangaroon, which we'll start off talking about, because that's what has the rare earths. And since this is the critical metals conference, it'll be the first time to talk about the rare earths, because last conference we didn't even have them on our projects, and we discovered these in May. We moved very quickly to assess those, and we'll talk about that as well. And we also have the Alara project down in the gold fields. There's some early stage lithium plays there. We have three main projects. The Kimberley is obviously very exciting, and Mangaroon, elephant country, but there's only certain times of the year that we can be up there. And as a junior, you live and die by your news flow and your results. So we make sure we have a balance of our projects and our commodities, so make sure that we can continue to feed the market and all of our supporters the results that they want and deserve. So we'll start off with Mangaroon. Mangaroon's we pegged over 4,500 square kilometers in the very unloved Gascoyne region, Mangaroon province, hence we got the Mangaroon name. We originally pegged this ground for the Money Intrusion, which is an intrusion that we gave the name to. It's a 50-kilometer long intrusion that the pastoralists had identified in the 1960s as bearing nickel, copper, and PGEs. It's sort of been lost to the mining industry because of that. Most of this region's history has been dominated by the pastoralists, including the gold mine at Star of Mangaroon, discovered by the pastoralists, mined by the pastoralists. When that happens, that knowledge tends to not go into the mining industry side quite so much. So if you pull up a WAMEX review of some of this area, you miss out quite a bit. But we also have pegged all the way down towards Yangibana, near the Hastings Yangibana Ironstone project, and we also had some gold in that area. So on the nickel copper PGEs, we have a joint venture with First Quantum. They have to spend $15 million to earn 51% of the project, and then free carry us all the way to a decision to mine. We still maintain 30% of the project at that stage. So that's the sort of deals that Dreadnought looks for. We're here to be carried into production or to be bought out by people who are more specialized than us in that realm. So the rare earths, April, May, we were out doing work on the gold and the nickel, and a couple young geos brought a mate along, Ross Chandler, Luke, Nick Chapman, and they all wanted to go have a look at the Yangibana area nearby. Historically, all the ironstones were supposed to stop at the Lions River Fault. GSWA reports, academic publications all said so. These guys wanted to take a day. It was been studied for decades, pretty well-established exploration criteria. Slight thorium anomaly. They're magnetic, and they tend to stick out of the ground. So we reprocessed the magnetic data and radiometric data. The guys picked out a few targets and went out there, and lo and behold, they stumble over what we now call yin. And we hope that the work that we do will show that we have the yin to Yangibana. So if you back Hastings, then perhaps we are the exploration play, and we're trying to do everything we can to show that we are very similar to what they have. Over the last 3 to 4 months, we've been looking at de-risking this as much as possible, and that's sort of two sides. One, show that we are the same mineralogically, metallurgically, geologically to the Hastings Yangibana ironstones, so we can peg that to a successful company. Two, also to de-risk it and make sure it's something worth for us going for. So in the last couple of months, while doing work in the Kimberley and elsewhere, we've been doing the orientation geophysics work. We'd actually huffed out a bulk sample. Chappie and I carried out 60 kilos of rock from the surface so we could take it in for early flotation test work. And what that's given to us is it's a significantly de-risked early stage exploration project for us, because we're showing now, as we announced this morning, we now have 6 ironstone outcrops over 11 strike kilometers. We're showing that this thing has scale. We sort of jokingly called the thing yin to be the yin to Yangibana, but it actually is starting to show to have that sort of scale and the same sort of strike as Hastings. We have the grade, similar rock chip grades to Hastings Yangibana. We got some fantastic high grades in there. Mineralogy, confirmed monazite, tick. It's also low thorium, just like the Yangibana ironstones, low uranium as well. So we're not going to have problems like some other projects around the place. And the metallurgy, standard flotation test sheets. Thanks to a lot of the work that's been done over the Yangibana ironstones for the past 10, 15 years. We're able to jump on the back of that, run our samples through a similar flow sheet process, and we produced a high-grade concentrate, producing 12.3% neodymium, 15% if you include the praseodymium, total 40% total rare earths, and that's taken the mass reduction down to about 3% of the total mass going in. So a really high-quality concentrate, high-grade, and high NdPr, just like the Hastings Yangibana project. So if you like Hastings and you believe in their rare earth capabilities, we have the potentially emerging to be the next thing next door, and we'll see how we go with that. We'll be doing an airborne magnetic survey in September, end of this month. We know these things are magnetic. We can trace them undercover. So that airborne survey will let us know where these things connect to, how much there are, and if we potentially highlight a few extra ones. We'll then undertake all of our environmental and heritage surveys are currently locked in and underway. And then in March next year, as soon as it dries up in the Gascoyne region, we aim to be out there drilling. And just like Hastings did when they started putting out their resources at Yangibana, we plan to put out a resource on every single drill program. So by the mid to late next year, we will have maiden JORC resources on these ironstones. The work that First Quantum has been doing in the background, and us a little bit, we're supposed to be managing the project, but we've been so busy elsewhere, First Quantum has been carrying the weight on that one a little bit. But 50-kilometer long mafic intrusion, 800 million years old, very sort of exciting, got pitmanite and chalcopyrite and things of fresh sulfides sitting at surface, which is not something you generally see in Western Australia. And over the last couple of months, been mapping through that, mapping the bleb sizes, and more recently, the last couple of months of mapping, we've highlighted over a kilometer-long gossinous horizon on the contact of the intrusion with the country rock, most likely remobilized sulfides. They're coming from somewhere. We have an EM survey kicking off this week, or sorry, not this week, this month. And that EM survey, if it lights up any conductors within this thing, it's a very resistive host rock. Any of those conductors get lit up will be very exciting. It'll be a very long survey. We plan on doing about 15 to 25 strike kilometers of the intrusion with the EM, all funded by First Quantum. Thank you very much, guys. And we'll put out the results of those EM conductors as the program's going on. Again, we're looking at getting this project drill ready for March next year. So we'll be out there drilling this, doing discovery work with First Quantum, and then doing discovery work and hopefully resource work on the rare earths. Thingamajigger here doesn't really seem to work. There we go. Moving on to the Kimberley. So this is where we've just come from and had some recent success, and where we'll be heading back up to here in the next couple of weeks. So the Traja-Yampi project, located just outside of Derby. It's on the Defense Reserve, Yampi Sound Training Area. It's been off limits to exploration since 1978. Last explored by Roy Woodall in 1958, looking at these beautiful walls of copper sticking out of the ground. There's not many locations like this left in WA. I went off when I was a bit younger, a couple years ago, to Myanmar and places like that to actually explore in a region where you see mineralization sticking out of the ground, because it's been off limits to modern exploration, and never thought to be able to come back to WA and have this opportunity here. So we've been talking about the potential elephant country. Like I said, we have the outcropping mineralization sitting there, and these vein systems are absolutely everywhere. High-grade copper, silver, antimony, bismuth, cobalt, and just sticking out of the ground. Like in Mount Isa, you see these veins sticking out everywhere. Sometimes they become a nice satellite pit, but the hunt has always been, where's the big breccia pipe sitting undercover? Where's the Ernest Henry? Where's the big prize? And proud to say that this last drill program, the second to last hole of the program, the first hole into Orion, we actually hit with only 3 meters of cover, and then 12 meters of massive sulfide from 45 meters depth. So that's a very exciting. Unfortunately, we then had to leave site for other activities, but we'll be back up there in the next couple of weeks to finish off what we started. And then Fuso was another one of these big mag anomalies sitting undercover. We've completed that, so we had a near miss, hit some high-grade mineralization just on the side. We've redone the magnetics on that, and we know that that's a near miss, and we'll be following that up as well. So Orion, I'm going to draw some things here. We were originally chasing nickel copper PGEs, such as what Chalice and IGO are chasing along strike. Orion was a magnetic and EM anomaly sitting within the Ruins dolerite, so it made sense. This was a nickel copper PGE target. But like the rocks like to do when you're exploring an area that hasn't been touched for 60 years, they like to tell you you're wrong. But thankfully, we were wrong in a way that we still got 1.6% copper, over an ounce silver, and 0.5 gram gold in that massive sulfide unit. Encouragingly, that massive sulfide unit hit the edge of the plate on the top left-hand corner. The magnetic intensity and the EM intensity increases to the north along strike. EM plate's about 400 to 500 meters long, 300 to 400 meters deep. Lines up beautifully with the massive sulfide intercept. And what gets me most excited going back up there is we only had 3 meters of cover, and the depth of weathering was down to 27 meters. We know from Rough Triangle and Grants and the work that we've done out there the last 2 years that there's a supergene profile preserved in this region. So if there's a nice supergene blanket sitting on top of this, that's going to produce some very juicy grades, and very much looking forward to drilling that. We'll be drilling that by the end of this month. So we'll be testing up dip and down dip from this initial intersection, and we'll also chase it to the south and to the north along strike. We'll then rush those samples off to the lab, since it takes 2 months to get a result at the moment. We don't want to keep everyone waiting. And then we'll continue to step out along the entire strike length of the EM anomaly And after we finish that, we'll go test some of these other magnetic anomalies at Orion. We don't think this thing is going to be alone on the similar structures, similar magnetic intensity. We'll also follow up at Fuso, where we had the biggest mag anomaly out there in the project area. Our first couple holes missed. We're completely stabbing into the dark a little bit undercover. We now know where these magnetic anomalies are in relation to where we drilled our holes and the deviations that they took. We'll be back out there drilling these holes on the back of Orion. And also chasing up Grants, which was one of the original workings that Roy Woodall chased up in 1958. So by the end of October, by the start of November, we'll have found out how big Orion is and how many friends it has. And that will be a very, very exciting drill program for us. And we're very, very excited to see what comes out from that. Now, Laura, quickly, since I've run out of time, this is going on in the background. Over the summer, we'll do some work out here. We've uncovered some lithium pegmatites, and we'll do some work on that. We've hit high-grade tantalum. Haven't seen the lithium yet, but it's the first work ever done on these pegmatites and ever in the history of the project area in the Greenstone Belt. So I'll be working on in the background. So our work plan, lots of drilling. That'll be a mix now of not only discovery-focused drilling, but also resource evaluation drilling. So by this stage next year, we could be sitting on resources of copper, of rare earths, and of gold, and anything else that we find in the meantime. So we're here to find things, and we're here to take them to resource and get that value locked in for our shareholders and ourselves. Thank you guys very much.
Thank you, Mr. Tuck. Fearless as always, just like the namesake, Dreadnought. It's a fantastic name for a great company. Now, the focus of our next speech is an element that changes and enhances steel when it's added to the smelting mix. It was added, in fact, to the steel beams in this hotel, making them lighter, making them stronger. It was added to the steel that was used for the bodies of the Model T Ford, and apparently, legend has it, it was actually part of Excalibur, making it light enough for King Arthur to raise it up. You know what the element is? Oh, don't, you can't laugh just down there. What do you reckon it is? Vanadium, correct. That's right, vanadium. So vanadium, we've heard about it briefly today, just a couple of times. I think Eddie might have mentioned it once. Now we're going to dedicate the next 15 minutes to it, aren't we? And we're going to dedicate that 15 minutes to it. One of the highest grade vanadium projects is actually here, safely behind Mark's wall, in Western Australia. The company that's onto it is Technology Metals. They're joining us on stage. Ian Prentice is the company director. So let's hear what he has to say about vanadium and the prospects of it strengthening your portfolio.
Thank you very much, Chrissy, and thanks to Vertical Events and the event sponsors for giving us the opportunity to have a chat to you today about Technology Metals and our Gabanintha vanadium project up in the Midwest of Western Australia, as Chrissy says, behind Mark's wall, and our ambition, our drive to be the next primary vanadium producer in the world. So I guess straight off the bat, why invest in Technology Metals? We do have a bunch of strategic commodities within our portfolio, within our projects, all located in this fantastic Tier 1 jurisdiction where we can get things done. The Gabanintha vanadium project, we've completed a feasibility study on Gabanintha, large, long life, low cost, all the fantastic metrics you want to look at. I guess the lowest cost quartile, those sort of things that really make a project really want to get developed. We've been very successful in engaging with the market. We've got over 75% of our annual average production in some form of offtake, with a whole bunch in binding offtake into the steel industry. But importantly for what we're talking about here as well is we've also got some really good engagement in the battery industry, which we'll get onto. But what we've also discovered over the last year through I guess COVID and some quiet times was we identified within our portfolio, I guess down the road from Gabanintha, within the same mineralisation unit, a satellite deposit called Yarrabubba. And Yarrabubba's is a high-grade magnetite vanadium project that we're progressing along as a starter project. So it's a stage 1 to development of Gabanintha. So it's enabling us to step through the capital development of Gabanintha, and that's a really key part of what our plans are moving forward. Very much part of the future energy solution, very much part of moving to net zero 2050. Vanadium is going to play a very, very key role in that as we progress through. Just quickly on the corporate overview, we've been listed for now coming up to 5 years almost, still only 150 million shares on issue, so we've been keeping everything pretty tight as we've progressed through our projects. Started at Galan Lithium as effectively a brownfields project with 4 RC holes in it, and we've taken it through, as I said, all the way through resource reserve to definitive feasibility study, and now progressing Yarrabubba through the same. So we've been pretty tight on our capital, making sure we make every dollar work for us. Currently sitting at about 64 million market cap and just a touch over 5 million at bank at the end of June. We had a reasonably good run of late with our share price, and that's linked partly obviously to what we're doing from a project development point of view, and also a little bit more of resurgence in the vanadium market and interest in there. Board and management team, fairly diverse skill sets across finance, commercial, technical. And we've got Michael Burke, who's out at our booth, or maybe at the back there, but we'll be at our booth later on, who's our project director looking at driving the development of our Yarrabubba project in the first instance. So vanadium, what's it all about? Why is it a critical mineral? Why is it going to be supporting net zero? Used in steel, mainly used in steel. 90% of consumption goes into steel. The more vanadium you use in steel, the less steel you need for that application. So therefore, you can reduce emissions. So as Eddie talked about it in the opening address about the desire for high-grade magnetites, reducing emissions in steel making, this has got the same sort of application. You can use less steel for the same application, and therefore reduce those emissions. So really key on that steel side of things. But what we're seeing is the big growth is in vanadium redox flow batteries, and I'll get into a bit more on that shortly. But that's going to be, I guess, as we say, that's the future in vanadium. That's where we see a lot of growth coming in really now in the short term. A couple of years ago I was saying medium term, but it's happening now. Fantastic, I guess, stationary storage solution for renewable energy. So we've been talking about EVs, we've been talking about mobile solutions, lithium batteries. Vanadium batteries aren't competing with that. These are large-scale stationary storage solutions that are going to be linked and as I say, to these large-scale renewable energy sources. I think coming out of COVID, we're seeing obviously clearly a big push towards more and more use of renewables. We're seeing a lot of stimulus spending, so we're seeing more construction. So vanadium is really having its time in the sun. Not sure how clear that graph there is of the vanadium price, but the vanadium price has increased 100% over the last 6 to 9 months. And again, going back to Eddie's slide at the start of the conference, it was right up there at the top of the list as one of the better performing commodities, and clearly we see a lot left to go. A bit about the batteries, a lot of detail in this slide, and you're welcome to come to the booth afterwards and have a bit more of a chat about these batteries, but some of the real key takeaways: you don't get any degradation in these batteries. These batteries will last for 20 years, and whatever charge you've got in them at the start of the life, you'll still be able to keep maintain that same sort of chargeability over the life of the battery. Safety, you don't get the thermal runaway that clearly we've had some issues in the past with lithium-ion batteries. Sustainability is a really big one. All of the vanadium that goes into a vanadium redox flow battery is recyclable. So at the end of the physical life of a battery, you can take that electrolyte out and you can repurpose it. So it's a very simple process. I know Chris from Neo Metals was talking about the lithium battery recycling, which is quite a process. Here, basically, you just pump the electrolyte out of the battery and repurpose it. So fantastic solution for these long-term stationary storage. A lot of detail in there. Again, key takeaways for a vanadium redox flow battery. There are other flow batteries. There are other batteries in this space. But the key thing for vanadium redox flow batteries is that both sides of the battery, if you like anode cathode, but both cells are made of vanadium, and it's the actual oxidation states of vanadium that allow this battery to be a unique battery in the flow battery space. So a really big opportunity there. And I guess, as I said before, the fact that you can recycle the vanadium 100% at the end of the life, repurpose it, put it back into another battery, or take it out and put it back into steel. So it's a very, very versatile. I guess just a bit of a takeaway on these batteries. They're quite a well-established technology. We've been deploying them now for a number of years, over 30 years. And just to let you know, we've currently got globally 146 of these vanadium redox flow batteries actually in operation or being developed for about 300 megawatt hours of storage. So they're actually out there being commercialised, and they're really hitting their straps at the moment and going to be driving a big chunk of the vanadium market. Into the projects themselves. So we've just recently renamed the area Murchison Technology Metals Project to capture both projects. touched on the Gabonintha Vanadium project, completed a DFS, long life. We see it from the study at 16 years of mine life, but that's going to extend well beyond 20 years. I guess, $924 million US MPV, 34% IRR. That's at slightly below current vanadium prices, and as I say, we see the vanadium price going up in the next little while, so we're pretty comfortable with those sort of metrics. $4.04 a pound puts us, right, as I said earlier, right down the bottom end of the cost quartile for vanadium producers. So it's a great project. Yarrabah Iron Vanadium project, we're in the midst of a feasibility study at the moment, but we're looking at producing a really high grade iron and vanadium product. So this is a magnetite product. So again, harking back to Eddie's talk about the Chinese paying significant premiums for high-grade magnetites in their steel making, this is the sort of product that's going to achieve those sorts of premiums once we get into the market there. So ESG is something that's important to all of us, and it's always been front of mind for us. I worked for quite some time in Africa, and then I came back to working in Western Australia, and really just applying the same principles to the communities in which we operate here in Australia. Focus on our environment and maintaining our environment, working with the communities, working with the traditional owners, and clearly around governance and safety. So a big part of our business, something we talk more about now, but it's always been front of mind for us as we've progressed through our business. I won't dwell on all of these items, but I guess, that second bullet point, current revenue number at a $8.78 a pound vanadium pentoxide price, $5.7 billion over that initial 16 years of mine life. So quite a significant number when you look back at a $64 million market cap that we're sitting at the moment. $8.78, currently the market for vanadium is sitting around about the mid $9. And as I say, we're thinking that's going to be heading north. A nice annual average EBITDA number there as well. One of the keys for the battery sector, like any battery mineral, is premium purity. We're looking just naturally being able to produce something that's 99.5% purity V2O5 product coming out of this operation. Putting that in perspective, a lot of the production coming out of China is sub 98%, so they've got to do a lot more work with that to get it into batteries, whereas we're right at that sort of level where you can go pretty well straight into the batteries. Thrown in there, one of our characteristics of our ore body is this very shallow oxidation profile, and again, that leads into our processing. Why we're a low-cost producer is we've got this very shallow oxidation, which means that our processing can be, I guess, the scale of our front end of our process, our mining side can be significantly lower than some of our peers, and therefore we can get a really competitive cost. And I guess importantly for the progression of the development of this project, mining licenses are granted. They were granted last year. We've had a long engagement with the EPA, and we're right at the final end of that point with the EPA at the moment, progressing our environmental approval. So they're all on track, hopefully by early next year. A lot of engagement with a lot of key partners, a lot of government engagement, a critical minerals project like ours, a significant investment into the regions of Western Australia. WA government's right behind it. The Northern Australian Infrastructure Facility is somewhere we're talking to about getting some funding support for that, and a bunch of really important vendors and partners in that list as well that are helping us move through to this development. And on the end there is some of the partners we've been talking to around offtake. Sinosteel is linked to our Yarrabah project. Some of the other names there are really in the battery space, in the electrolyte space, but we've also, as I said earlier, we've got some binding offtakes into the Chinese market. Running a little bit low on time, but just quickly on the Yarrabah project, it's just, if you see on the bottom right hand of that diagram, that little red square there, that's the Yarrabah tenement. So within that tenement, we've got about 28 million tonnes of resources of high-grade magnetite iron. So it's a nice head start when your resource grade's already at 38% and your high-grade component's already sitting almost at 50%. So we're looking at a 1.5 million tonne per annum production profile coming out of Yarrabah, high-grade, high purity with a vanadium credit, really good grades that it talks about there, really low deleterious elements, which enables us to access that premium pricing in the marketplace. Interestingly, we also, in our processing, it's a magnetic separation process to get our magnetite concentrate. Our non-magnetic tails contain titanium. So we get a really nice titanium byproduct from our waste stream. So we're a little bit behind in our test work on that. The star of the show there is the iron and vanadium, but the titanium work we've done so far is telling us we're going to get a really attractive product in what is a very, very tight titanium market at the moment. Probably a bit more technical detail in here, but that's a cross-section of the ore body, pretty consistent whether you're at Gabanintha or at Yarrabubba. A really solid, the pink zone's a really solid, thick, high-grade, massive magnetite zone. So you can see some of the widths and grades there, 20-odd metres at high 40% iron, so a really great place to be starting with. It means we've got a very simple flow sheet to deliver our high-purity product. A whole bunch of other very promising things here, which make it mean that we can get go through the processing, keep those costs low, keep the simple flow sheet, differentiates us from the majority of magnetite projects around the world. We're not large scale. We don't need a lot of water. We don't need a lot of energy. We're doing a pretty simple upgrade to produce this high grade product. One of the key, I guess, leg ups we got from that is also we've completed a definitive feasibility study at Gabanintha. We're going to be building all the infrastructure for Yarrabubba within the Gabanintha footprint. So all the work we've done in the DFS for Gabanintha is supporting of the Yarrabubba study. All the environmental approvals we've done for Gabanintha are supportive of the Yarrabubba development. So I guess it's a really nice, neat add-on, and it's going to be something that really enables us to stage the development and really, I guess, help with preserving our shareholders' capital. Part of the strategy that we're looking at, particularly at Gabanintha as we move further in, is being part of the solution for the VRFB rollout into Australia, into WA. And part of that is producing electrolyte. So we've had some really good long engagement with some really key partners in producing electrolyte here in Western Australia. So we've got some engagement with some Japanese groups, some Chinese groups on really being able to do that. So it's a really good downstream value add process, which will then enable the growth of a whole new industry in WA around the VRFB. Just quickly, Chrissy, on our timetable, we've done a lot of work on Yarrabubba. Down the bottom there, we're talking about having mineral resource and ore reserve coming out, really in the next few months. Pilot test work progressing along for Yarrabubba, and then delivering our DFS for Yarrabubba by the end of the year. So we believe it's a compelling investment story. Leverage to these critical minerals in greening our economies. We're aimed at delivering on our projects, and I believe we've been doing that all the way through since inception. Globally significant project will be the single largest vanadium producer in the world once we get Gabanintha up and running. Stable operating environment, and I think we've got the team in place to deliver on that. And so please come and have a chat to us at the booth. Thank you very much.
Strong finish there, very strong finish. Ian Prentice, Technology Minerals, thank you. Metals, thank you very much. And that was your 2-minute warning bell there. There we go, rightio. Okay. All right, next up on stage, Caspin Resources. It's a new mineral exploration company, having floated on the ASX in November 2020, last year. The company's CEO has joined us on stage, Greg Miles. He's a geologist with over 25 years of experience. He's the company's CEO. He's also the former executive director of Caspin Resources Ltd. Now that's important because he led the company's technical team through the acquisition and the exploration of 2 projects, Yarrawinda Brook and Mount Squires, and they now form the foundation of Caspian. Would you please make him welcome today?
Thanks, Chrissy, and welcome everybody to the Caspin Resources story. Thanks for coming out and hearing our bit of an update. Good to be here at the New World Metals Conference. This presentation was lodged on the ASX last week. So quickly, a quick corporate overview. There's only 2 things I want you to take note on this slide, and that is our 2 largest shareholders, Chalice Mining and Tinchy Materials. Now, everybody knows Chalice. They're one of the success stories of 2020 and probably 2021, and probably going into the future as well. They're well known. They put money into our float because they recognise the potential of our project and our team, recognising the capabilities of our team. And that's a very strong bond that should provide confidence to shareholders. Now, what you wouldn't know probably on those top holders is Tinchy Limited or Tinchy Materials. Look them up. They're a Shenzhen-listed company based in mainland China, and they are in the battery metal space. They're producing nickel sulfate. They've got contracts with LG and Panasonic. There's only actually a limited number of companies that actually make batteries. These guys are well and truly ahead of the curve. I've been fortunate enough to go to their factory in mainland China back in 2019, which incidentally is just down the road from Wuhan. So I won't be going back there anytime soon. But I can tell you they're real, and they're the real deal in battery metals. So that's part of the link into how we fit into this, battery metals thematic. Now, the other thing you can take note is that we've obviously had quite a bit of volatility, speculation on our share price. It's not really the way I'd like to see it. I believe that we've actually added a step change in the underlying value of our company with every exploration program that we've done. I'm happy for people to speculate because what that does show is where our share price goes if we even have a hint of success. And if you didn't believe that, well, of course, you can always refer to the Chalice story, which is the ultimate success, and it gives people a sense for the value of these sort of projects. So 2 assets here in great state of Western Australia. The Arrowinda Brook project, which I'll be mainly focusing on, and we might just touch quickly on the Mount Squires project. We actually do have what we consider a third asset, which is a potential contingent payment if there's any further transactions done on the West Musgrave project, which gets back to what Chrissy was alluding to before. There's a lot of detail behind that. I'm not going to talk about that. You can go back to our prospectus where there's all that detail. So the Arrowinda Brook project, and this slide actually doubles as my ESG slide. As you can see, we're drilling in farmland, agricultural land, just north of Perth, only an hour's drive. And what that photo shows you is us drilling away in a paddock. Now you can consider that, but that's somebody's backyard. That's we obviously have to form a relationship, be a good citizen in the community. Those sort of access agreements don't happen overnight. It takes a long time to build those sort of relationships and actually get on the ground and do work. So you can see we're just up the road from Chalice. Chalice geoloma discovery. That's about 40 kilometres. Look, what I like about this project and how it sort of fits into the theme of this conference is that it's a multi-commodity kind of project. PGEs, nickel, copper, cobalt, gold, all these have a new world metals kind of application. But what I really like about it is that it's still that these commodities aren't a fad. These metals will be around and important for long after we're gone. Arrowinda Brook, there has had some previous exploration. We like to consider ourselves a little bit ahead of the pack on terms of where we're at in terms of exploring the belt. Now, we've been very active. As Chrissy said, we've only listed since November. You can see there from that photo, we've done lots of different exploration programs, been very active. Money goes into the ground. We've been running very lean. We've just recently started to expand our team so that we can actually start going through all these new data sets that we've been collecting. You can see there are lots of geophysics and now drilling targets as well. So Arrowinda Brook itself has been around for a while. There has been exploration done there in the past, goes back to the 70s, but most of it's very, very light. It's a lot of drilling, mostly superficial, down to sort of 50, 60 metres. Didn't really test the bedrock. Our initial program here was designed as a proof of concept. We drilled 2 holes to demonstrate that the PGEs that we see on surface, they're quite extensive, over 2 kilometres of strike, do actually continue into the bedrock. And that's important because then that shows that it's open in just about every direction. And as you can see in this slide, sorry folks, it's going to get into a slightly more technical phase here, but on the photos on the right, you can see that what we've got is the right sort of rocks. We've got mafic and ultramafic rocks with sulfides, copper, nickel sulfides, and the PGEs, palladium and platinum, are associated with these sulfides. So we're in the right address. We've demonstrated we've got the right rocks and the right sulfides. Now, and look, for 2 holes, we've learned an awful lot of information. We've discovered that a lot of that drilling that was completed historically is actually probably where a lot of exploration, where the mineralisation fortuitously came to surface, and it outcrops on a bit of a hill, Yarrabrook Hill. But I guess what's really important, and this is the sort of the game changer for us. What we realise is that area that's been previously explored is actually only just a small part of what we now recognise as the intrusion. So, and the game changer has been our gravity survey. We put the results for this out just a couple of weeks ago, and on the right-hand side, the magnetics, that's just free data set. The warm colours represent mag highs, and these generally are your mafic and ultramafic rocks. We thought that those sort of 3-4 blobs there, that was the extent of our intrusion. The figure on the left is actual gravity survey. So again, the warmer colours represent mafic, ultramafic rocks. And what we found is, wow, this is actually a lot bigger than what we originally thought. And these rocks don't have to be magnetic, but they are always dense. And so gravity is a way of measuring the variation of density in the Earth's crust. And so it's a great tool for mapping these mafic and ultramafic rocks. And now all of a sudden, so I guess the purpose for doing this in the first place is that there is no real single tool that you can use to find these kind of deposits. You've got to bring all these data sets together, give them to the smart guys and girls in your team, and help build a geological picture. And so now we compare that with our geochem, which is on the bottom left. So that's palladium in soils. And we recognise that all these soil anomalies that were sort of outside what we thought was the intrusion are actually inside the intrusion. So they are representative of bedrock mineralisation. So that's a massive leap forward for us. And so all of a sudden we've got mineralisation potentially over at least 3 kilometres worth of strike that hasn't even had a drill hole. And not only that, we've also got going back to the EM survey, so the electromagnetic survey, great for mapping massive sulfides. Doesn't always work in this area because some of this mineralisation can be disseminated. But we do have other anomalies there, and we've gone back and realised, well, actually, these sort of anomalies, XC22 being one of them, is something that we need to go back and drill test. So, like I said, it's been a game changer, and it's generated a whole new range of targets. And then beyond Yarrabrook Hill, there's still a whole project area yet to explore. We've done soil geochem over only 35% of the project area. We'll continue to add this soil geochem to our data sets as we gain land access. We've also flown gravity over this as well, and we'll start to assimilate all this data set. We've got a lot of targets ahead of us, and a wealth of targets really to go and explore. So we're drilling at the moment. We're sort of feeling our way in a sense, working out, stepping out from our previous drill holes, still trying to get a feel for what Yarrabrook Hill looks like. I think we're getting this is probably more of a geographical sort of spread of drill holes, so we can start to piece our geological model together. It's going to be an exploration program with multiple phases, but we've got the cash to do it. We just recently raised just under $10 million, so boost our coffers to just under 15. So look, we can fire a few shots with that. So we're really coming into the field season now, and we're looking forward to continuing with our drilling. Had a bit of a pause there on the clicker, and then I guess what really gets us excited is that this is really a new mineral province. This is like the Fraser Range after Nova was discovered. It's early days. We think we're probably the most advanced exploration project outside of Julimar, and so we've got a systematic exploration program designed to find the next one. So just quickly, a touch on Mount Squires. Out in the West Musgrave region of Western Australia, where I've been working out here since 2014, formerly with the West Musgrave project. Mount Squires wasn't part of that transaction. It's historically more of a gold play. There has been a little bit of exploration here in the past. What we've we've only sort of started that exploration, and that's sort of soil geochemistry. And which is the figure on your right, again, that's a suite of commodity elements there: moly, lead, gold, and copper. And I guess what I'd like to draw your attention to is what we call the Duchess prospect. And what we've recognised is this sort of zoned geochemical signature. And the previous exploration, which was really focused on hand pump, which is more of a gold-only play, where there has been previous drilling, actually sits sort of off on the peripheries of this. And this actually is sort of a bit like what you might expect in a porphyry copper system. So that's kind of interesting. We've reprocessed some old IP. It's an IP that's coincident with a mag anomaly. This is another interesting sort of feature that's sometimes associated with copper porphyries. So that's really exciting. Can't wait to get out there and drill a hole in it. And then I guess in the back pocket, and this is what's kind of exciting really from a battery metals perspective, is of course we're a long strike from what I believe will be Australia's next, well, sorry, Pete Harold, you know, there are other nickel plays in the pipeline, but nothing's going to really match the scale of Nebo Babel. And Oz Minerals are going hammer and tongs on Nebo Babel through a DFS, and we happen to sit along strike from that belt. We haven't really started our exploration for nickel and copper sulfide there. We're cognizant of the fact that we've got just as great a likelihood of finding mineralisation there. There's, you know, that intercept that we display there is only 200 metres from our tenement boundary, and that's in all likelihood those rocks continue into our tenements. So that is on our target list. So we've got a long sort of exploration plan ahead of us at Mount Squires. So in a nutshell, Caspin, look, it's all about Yarrawinda Brook at the moment. That's the reason for you to hold a share. It's Australia's newest and most exciting mineral province. We've got the right team. I haven't really talked about the team, but John Horonsky is one of the world's leading experts in this type of mineralisation, and I think we've built a good team to explore this region. We're active, lots of targets, and I think we've got all the foundations for success. So, Christy, I think I'll leave it there. All right, thank you.
I know it's right. I still have to wait for everyone to clap before I can come and actually speak to you. So thank you. Would you please thank her again? That was brilliant. Actually, really interesting conversation. And if you want to take the discussion further, he put forward his case for you taking a share in the operation. I'd like to see if you actually think it's worthwhile. I'll have a chat with you over drinks afterwards. Our next presenter, making his way up here, the happy Chilean, it's Galan Lithium. They've been in investor news reports of late. Are you checking your text in case something's come through? Are you, JP?
Put it on silent.
Last moment? Last moment, okay. And in August, they moved to raise $50 million to fund accelerated development of their lithium projects in Argentina and also here in Australia, here in Western Australia. You should have an update for us on that and also about the future of those projects. Would you please put your hands together? Welcome, JP Varga de la Vega. Among other things, he spent many years as a specialist lithium analyst.
Thank you. Well, good afternoon, ladies and gents. It's a privilege to be standing here after pretty much reviewing almost 4 years since I was in Argentina on a side trip where things change and make what Galan is today. So I feel very also privileged to have a fantastic team in Australia, and the board has been really good to work with, and the guys in Argentina that I miss them. I haven't seen them in 2 years, same as in Chile. No, it's been sort of like a dream. Working with COVID, working at a distance and being able to kick goals all the way, it feels like a dream. And so I just want to acknowledge them and thanks my team. Otherwise, I wouldn't be standing here. So the usual disclaimer, Galan, as I mentioned, it's got a personal note, but we are a very motivated company to get this over the line. We have a fantastic team, as I mentioned, with people that have been in lithium, breathe lithium, and all what they do is lithium on the other side of the world, in our Chile and Argentina. The guys here in Perth, my boards are very encouraging and very passionate about, in a way, probably couldn't share the same in the same language, but these guys are fantastic to work with. So what is the foundation of Galan? And I will say 3 legs. We got a fantastic project, 2 fantastic projects in Argentina. The team makes the other leg. And lastly, we have raised $50 million a couple of weeks ago. We'll have a strong funder to move forward, accelerate some progress, and try and throughout the presentation, I just want to give you a flavor where the company can go. This is no longer an exploration. We were having a bit of luck in the past. We have something solid, and we have the highest grade, the lowest impurities project in Argentina. And grade is king at the end of the day. That's what makes Galan unique, and that's why we can start with what we have and make this a special story. So we have an inventory of around 3 million tons in 2 projects. And then just as a flavor, when POSCO a couple of years ago bought Sal de Vida, the northern part, from Galaxy, they paid $280 million. Today, that transaction looked cheap. You have to look at Millennial. It's got a similar sort of amount of for a transaction with lower grade, and also it has they've got to contribute. So the market is definitely changing. The sector is changing, and a key inflection point in all demand supply of this is, yes, there is a strong demand for battery vehicles, but what it gets me very excited is that there will be a point in time, and I will think that this is going to come within the next 5 years. In the next 5 years, you're going to buy your last combustion engine car, and within the next 5 years, people will think about what they're going to buy. Not necessarily because it's got shorter ranges and all the difficulties that today an electric car could present, is the resale value. So think about that when people realize that the combustion engines and cars will worth nothing on resale or a very low amount of money. Then the inflection point of the adoption of new technology is going to happen, and we're going to see it. So this is gets me very excited. So what do we have? We have a project that I will study, that did a PEA early this year. So last year, in which we have very strong metrics, low capex, low opex, and this makes a project with a price assumption of $11,500 a ton. Some people are saying the spot price is almost $20,000 a ton. We came out with $1 billion project for 20,000 tons. Since then, what have we done? We're looking at potentially 25,000 tons, and also we put on the big picture Candelas. Candelas is our next project that could have a big picture in all of this, and this is it's getting that exciting day by day, and the market is definitely changing and it's going forward. So we're taking Hombre Muerto West, our largest project. We're taking down to feasibility, and we're starting with Candelas in parallel. We have the cash, and we can get where we want to go. So this is the location, the Lithium Triangle in Argentina. If you want to see where we're located in the Lithium Triangle, we are the Hombre Muerto salt flat. Our neighbors are POSCO, Livent, and Galaxy, and now it's called Orocobre. So we are in elephant country, and we are growing bit by bit. We share the same sort of characteristics in chemistry and grade, and probably the grade in our end is a bit more. And you can see on the next slide here in the grade that Hombre Muerto West has compared to the rest of our tenements. It's a bit of luck of geology that the concentration at Hombre Muerto happens more on the edges than in the middle. So this is a bit of a gift of nature for us. We have also low impurities, and the lower you go to zero, the lowest you can, the lowest impurity means that the lowest your operating cost, because you need to extract less impurities. So this is a show that it shows the level of impurities. So within this cluster, we have what Hombre Muerto has to offer: Livent, POSCO, and Orocobre now, and ourselves. So we share the same sort of chemistry. We have proven that our chemistry is pretty much the same as everyone else. And if you start looking what Galaxy releases in operating costs, we are not deviating from that. If you look at what Livent has got on operating costs, even though they got a different sort of technology, we're not far off from that. And the beauty of where we are is a salt flat that is known to be producing lithium for more than 20 years. The lithium revolution started at Hombre Muerto West, so Hombre Muerto, and this is with Livent. And if you remember the old Sony handycams, Those lithium-ion batteries came from Argentina. That's where the whole thing started. Fast track a few years, well, a few decades later, and you see the first Tesla cars with Panasonic batteries. They all come from Hombre Muerto, from Livent. That's where the whole thing started, and then the whole industry changed. And we definitely want to be part of this in the future. So in terms of carbon footprint, this is data taken from SQM. We're doing our own study as well. We're going to come out with our own numbers. But this gives you a flavor that lithium carbonate from brine has a low carbon footprint. At the end of the day, this is, the market's putting more importance to this, but the importance for all of this is that we need lithium from all sources. And the energy intensity as well, it comes the lowest from the brine. And why does it come from the brine? And that's pretty much because the sun does evaporation. And once we have the evaporation happening, we don't have a bill to pay to the sun. It's all free. We are in the highest radiation place on Earth, the Atacama Desert, and the altitude and the dryness is the perfect condition for evaporation anywhere else that we've seen so far. So a bit about the company. We have 271 million shares on issue. We did a raise a couple of weeks ago. We'll have after the transaction, we'll have around 65, give or take, $1 million in the bank. So that gives us a strong position to do everything that we want to do pre-construction to go forward into production. So what does it mean? It means that we can do 2 studies at Candelas and Hombre Muerto West, and we're trying to take these to feasibility. So I'll show you where this is going to take us. But in terms of the people that I just want to highlight, we have Richard Humphrey, which is a mining lawyer. He's been around for a little while. He's been to Argentina. He knows the ins and outs and how things operate over there. It's been fantastic having him for the last couple of years. Daniel Jimenez, I will say, is our critical lithium man in our board. He's been with SQM for 28 years, 10 years as a senior VP of commercial. The lithium industry remains small, and he pretty much knows the whole market. So he's been a great contribution, especially in South America. He's pointing out with the right people and where we have. And I also acknowledge Chris and Terry, they are part of the audience today. So thank you for being here, gents. And Raymond couldn't be here because he's got a flu shot. This not, sorry. So where the whole action happens. So our major project is Hombre Muerto West here on the left. We have Candelas on the right, and the purchase from POSCO is here, here to the north of Galaxy, and now it's all recovered. Livent is there, and the carbonate plant is here. So what have we done? We're taking, I'm going to zoom in that bit. We're taking to POSCO and the data that we have. This is the ponds done by POSCO. The project start, as I mentioned, given a high-grade, low impurities with a very low operating cost. So in terms of the brine producers, we could be very competitive, and we have definitely room to improve. So why do I say that? If you look at what the other ones have done, you can choose a very strong competitive position. If you look at Sal de Vida Galaxy, the data that released, and LAC, and we put LAC here, even though it's not ASX, it's because they're producing 40,000 tons of lithium carbonate a year. They're going to expand to 60,000. But when you look at the OPEX of LAC compared to us, we can be competitive, even though we don't have the scale, but we have the grade to fight back. So what have we done so far? And in terms of the advances, we've done our own study that we can probably put up to 25,000 tons of lithium carbonate in ponds, and that's Hombre Muerto West. We have purchased this next ground here that could yield anywhere between 200 to 500,000 tons of lithium carbonate equivalent. So our resources will increase. We are currently drilling for reserves. We just put a Twitter showing our rig on site and operating. So we can reduce OPEX, CAPEX, and yield. So we are doing test, because what we want to get is to be able to produce something robust, because we move into feasibility. So one of the things that, as I showed, this is the lithium carbonate picture that we've done. This is the concentrates, very, very oily. We have shown that brine is special to get to concentration of 6% lithium, not to confuse lithium oxide. If this was lithium oxide, will be 12.9% lithium oxide. So Greenbushes not even does that. So we have a very competitive product that we see that this lithium concentrate, it can be sold within Argentina, could go to Chile, could go to Asia, it could go to Europe. So this is the next thing that we're trying to do. So in other words, we are analyzing and learning from what has been done in Australia, trying to apply to Argentina. Australia became the largest lithium producer in the world because they are producing concentrate. You know, the bigger companies are now what you see in Kwinana, happening for lithium hydroxide. But you need to start somewhere. And something that's stopped the investment is been the high level of capex that's required to get there. So we would like to start with concentrate, walk before we run, and then once we get there, we're trying to get to cash flow sooner and quicker, and with less capex, because we'll just need to do the ponds, and the water requirements and the power requirements will be low. And lastly, we have the Greenbushes JV, and this is very interesting because where we are, 3K south from the pit. And one of the things that we are very interested in is to keep exploring this area, do geophysics, have a target. We look at data from CSRO, and this is something that we are tackling. We now got the funds. We're going to move into the area as soon as we can, and we're going to be able to tackle it quickly. So in terms of the time frame of things, we've seen that now with the funding, we can attack two fronts. We can get Hombre Muerto West well advanced and followed by Candelas. We have in the results here, and we're going to complement everything once we've done Candelas and then Hombre Muerto West. So overall, if you look at what Galan can do, it could be up to 40,000 tons of lithium carbonate equivalent. That's a big picture of where Galan could be on a combined basis. So somebody said to me, 40 years, 40,000 tons for 40 years. This is something that we definitely can look into. I'm very excited to give you this update, and thanks for your time.
Thank you, JP. Much appreciated, sir. All right, team. Seems to be a few too many people in the room for my liking right now. Did anyone want to leave at this point in time? Sure? Unfortunate. Okay. Do I have a representative from Coopers in the room, please? Anyone here from Coopers? Stu, can you just stick your head around the corner there, please, sir? I hate to ask the boss to do my dirty work for me, but there is a bottle of Grange involved, and I did promise that this was the point in time that we would be making the draw. There they come, here they come. Now, we did clear up a couple of... Is Eddie gone home? Has he taken off back to work? Has Eddie gone back to work?
That's good because that means he can't.
Oh. Remember, he was a little bit beside himself because the picture on his coffee cup made him more flustered when he came in. He tried to pretend it was because of those 6 accidents, and that's why he couldn't get here on time this morning. And we said, no, it was the girlfriend. Yeah, but apparently it wasn't. It was just someone with whom he had unrequited infatuation with, but that's okay. Coopers, come up here, please, Toby, and help me out. All right. This is I'm going to hold this. This is dangerous giving it to me. Wait, come on up. All right. So tell us about this bottle of Grange. How did you acquire it? Is it from anyone?
I didn't bought it, actually. So this is our first foray into sponsoring a mining event, and we thought it'd be a good idea to give someone a bottle of wine.
I think she started pretty well, don't you? Yeah. All right. So a big question for you before you draw out the name there. Go on. I won't hold it. I'll pop it here. Look, let's just pop it away from Chrissy. That's probably a great idea. But could you write something like that off? You're the accountant.
Well, as long as you don't drink it.
Okay.
Can we write it off as a tax asset? Yeah. There you are.
All right, it's a tax asset. So will I put my hand in here? Because I do not have my business card in there. Hold on, I'm shorter than what you think, Toby. A little bit spinning around.
So you have to be here to win. You have to be here in the room to win the prize.
It's a fella.
Paul Arujo.
Paul Arujo. Paul, are you in the room?
Well done, Paul.
Good on you, Paul. I'm not sure if you're looking happy enough, Paul. Can you just put a little bit more of a click in your heel there, mate, as you come up the front? You've got a bit of a jaunty step there, hasn't he? Would you like to just take it so we don't double handle it? And I don't. Well, actually, how about come and have a photo taken with the guys from Cooper? Okay. I will stand to one side. The important thing is Cooper and the bottle of Grange and Paul smiling. I don't know if that's smiling, Paul. Are you panicking that people are going to fleece you as you leave? They're going to. Well done. Wait, Paul. Will you drink it, or is this an investment?
I think it's an investment.
Yay or nay? Yeah, no, we don't like you, Paul. Off you go. Thank you so much for that. We really appreciate Toby and all of the team at Coopers. And if you have any sort of accounting needs at all, go and have a chat with them today. Make sure you make the most of the next hour or so that we're here. Ask them the questions, grab a card and follow up with them. And thank you so much for supporting us. Did you all enjoy your coffees? Yes, here. We much enjoyed our coffees. All right. We have 2 presentations to go before we are completed our conference for today. And our next presenter is Ken Brinsden. Ken joined Pilbara Minerals back in 2016. He led the development of the, Pilbara Lithium Tantalum project, which progressed from first drill hole to concentrate in less than 4 years. Now, that was exponential growth, resulting in Pilbara Minerals becoming one of the world's leading raw mineral suppliers for lithium, with a portfolio of growth options to execute as the demand for battery raw materials increased. Now, as highlighted in Eddie's presentation this morning, Pilbara Minerals is now one of the best performing lithium companies on the ASX this year. Would you please make welcome Ken Brinsden.
Thanks, Chrissy. Thanks, Stu and the New World Metals team for the chance to participate today. And ladies and gentlemen in the room, thanks very much for persevering deep into the day. It's a pleasure to be with you. Rather than too much of the infomercial on Pilbara Minerals, I'm keen to share with you today a bit more depth, a bit more about the structure of the industry and why Western Australia actually as a whole is so well placed now to take advantage of the phenomenon that you've heard a lot about during the course of today. So a bit more technical input, a bit more about pricing, where it's headed and the structure of the market, and then with a piece to indicate how Pilbara Minerals intends to take advantage of that whole dynamic. So happy to share with you. You can find our disclaimers on our website. They're in every one of our publicly listed presentations. For those of you that may not be familiar with Pilbara Minerals, we developed the Pilgangoora lithium tantalum project, not far from Port Hedland. It's about 100 kilometres due south of Port Hedland, and we take advantage of all the fantastic infrastructure that exists in the Pilbara region, roads, amazing port, and actually also fantastic water resources. So that's a big part of our success and very rapid development. It was basically 4 years from the first drill hole to the first concentrate hitting a ship in October 2018. And we've successfully ramped up our Pilgan facilities. And given the demand conditions today, we're now operating at well and truly 100% of capacity. It was a tough couple of years, 2019 and most of 2020. A lot of pain was wrought on the industry as the China subsidy regime got backed off, and there was a couple of high-profile failures. We were able to take advantage of one of those and purchased the Altura lithium operations out of receivership. The consolidation that's gone on there is a really important part of Pilbara Minerals' current success, and I'm going to dwell on that a bit more later in the presentation, because we were presented with a fantastic opportunity to buy an asset with unallocated offtake in place, and that's important, and I'll describe why. So consolidated operations makes for a much, much bigger facility. Today, almost 580,000 tonnes of spodumene concentrate capacity. Bear in mind that up until 2018, Greenbush has had about 600,000 tonnes of capacity installed. So we're already a very, very big part of the global supply base. Moving on, there's an incredible dynamic underway with respect to growth and the demand thematic that's emerging, and I'm having difficulty moving on. Yeah. As embarrassing as it is to reflect on, our industry has benefited from the global pandemic. Internationally, stimulus has been run through just about every economy you could imagine, and a lot of it's been targeting in inverted commas, the new energy sector. Basically building out the industries of the future rather than money ceded to existing industries. And as a result, batteries are typically a co-commitment to the application of new energy. So electrification of the transport industry and the rollout of renewables. That's had the effect of bringing forward demand. And that's leading to some pretty extraordinary conditions in the market today. We're now approaching record high prices for lithium chemicals in China. We've already surpassed record high prices for spodumene landed in China. And my take on where the industry's at is really that it's only just started, and there now needs to be a pretty incredible incentive price to ensure that the front end of the industry attracts enough capital in support of that demand. So growing the supply base by orders of magnitude in support of that demand. That's the current theme. We think Pilbara is really well placed to take advantage of that. No doubt Eddie would have shared, what the demand story is all about, but it's pretty incredible what's happening. Well, while we don't see it here in Australia, consumers in Europe, consumers in China, a little bit about the North Americas are well and truly switching on to the EV. In certain markets in Europe, 25% of the cars sold now are EVs. It's pretty incredible. It's coming to Australia eventually. If we weren't such a laggard generally in the energy sector, I suspect we'd be getting there faster. But nonetheless, for the average consumer around the world, maybe just not here in Australia, it's already happening. And it's a very real option to consider the EV in terms of cost, in terms of accessibility to the infrastructure that's required in support of the EV, and actually the product itself. If those of you that haven't driven an EV, absolutely encourage you to do it because it's fundamentally a better car. It's a much better experience than driving an internal combustion engine car. And now the evidence is in the sales. And then when you think about the implications within the industry, here I'm reflecting on the middle section of the battery industry, the sort of high-end value-added chemicals and cathode materials. The top graph, the green bars there in the middle, that's high nickel cathode materials. The lower lithium iron phosphate cathode materials. Now, the reason I've included that graph is to show you that the growth, the annual growth that's going on is being measured in hundreds of percents. The month of July 2021, 300% growth in high nickel cathode materials and 200% growth in lithium iron phosphate chemicals or cathode materials. Hundreds and hundreds of percent. Now, there's not many industries that can sustain that for too long. And it's obvious that there's going to be pressure on the raw material supply base, and that is ultimately going to be reflected in the incentive price to grow the industry. So it's very real. It's already happening. We see it through some of the direct relationships that Pilbara Minerals has. CATL is one of our largest shareholders, and their rate of facility growth is absolutely happening at breakneck speed. The amount of money they're investing in building out battery making capacity. Now, the challenge for the industry is that it's, as much as it costs money to build a battery factory, it's actually not that hard, at least not when you compare it to the time it takes to build the raw material supply base that's going to supply it. But as is often the case, especially with the Chinese, they'll build the stuff on the assumption that the raw material's coming. But there's a disconnect that exists today. It's not coming fast enough, and that's why prices are going higher. Moving on, another example, middle section of the battery industry. Here we're talking about or reflecting on chemical conversion capacity. Before I started with Pilbara Minerals, going back to 2012, and even when I first went up to China in early 2016, you could basically count on virtually one hand the number of people you could visit to sell spodumene. Move forward to 2020, 2021, and the number of facilities has gone off the charts. We're up to about 20 odd now and growing, with some being constructed overseas, and obviously some of you would be aware being built here in Australia. So So the number of facilities has grown very, very rapidly. It hasn't necessarily been the case that the number of mines has grown rapidly. Another disconnect. So what do? Well, we grow and we think about how we participate in that market as it changes. And that's precipitated the Battery Material Exchange, an innovative way to access a broader buying group of unallocated spodumene. So we built the platform with NickelX Digital here in Perth. We ran the first auction in July or late July and immediately broke a record for the price received for spodumene. We ran the auction. We vetted 28 participants for participation in our online platform. 17 individual bidders, bearing in mind that back in 2016 you could only really meet with 5. 5 of those groups, all of which are users of spodumene. It's not about a trading story, it's about users of spodumene. 5 of those bidders bid $1,100 a tonne or more, bearing in mind the previous record price for spodumene from Western Australia was about $950. When the auction settled, it closed at $1,250 FOB Port Hedland for 5.5% product, normalised for delivery to China and a standard 6% product, that's plus $1,400 a tonne. Again, for reference, the previous record was $950 a tonne. So why does it happen? I know it's going to surprise a lot of you. There is a fundamental shortage for spodumene. It's crazy because only 12 months ago we were talking about, struggling to sell it. That's part one. The other part is the buyer of that cargo has taken a view. They've given away their entire margin to secure the spodumene. They've handed it to the miner. But part of their thinking, and they've been right every day of the week since the end of July, chemicals pricing is going higher. And that's exactly what's happened. Now we're in a bit of a virtuous circle where spodumene pricing is going to drive the chemicals. The evidence is here, we're dropping the arrow. That was the date of our auction. Spodumene price redefined as a different level of transparency emerges about the price, and chemicals pricing races forward. That's exactly what's happened. There's evidence to prove that to be the case. The virtuous circle that emerges is if you're getting a higher price for your chemical, you can afford to pay more for your spodumene. That's why I would say we're in for a pretty extraordinary period of pricing, over the next period. I don't know how long, but nonetheless, it's going to be a healthy price and you'd be mad to bet against it not going up. Okay, what do we do next? It's great today to be a merchant spodumene supplier because we're going to get a very healthy price for our spodumene. But in the medium term, it does make sense to be more vertically integrated. Just to reconsider the supply chain is also a worthy pursuit. Just because spodumene went from Greenbushes to China, the chemical conversion over the last 25 years, it doesn't mean it's the right answer for the industry as a whole. We believe there is the ability to recut the supply chain and create a much, much more efficient solution for your customer and to create a much more carbon-friendly product in the supply chain. There is those that will say, the hard rock industry, it's got too high a carbon footprint. Well, I would simply say you're calling it way too early. The reality is there's been very little innovation in those 25 years. In fact, there's been virtually none. Whereas if you consider the supply chain in a different light and the product that you deliver, you can create an efficient supply chain solution that also happens to be a much, much lower carbon footprint. So we've done that through announcing our midstream product strategy. The idea is to invest in facilities that support a higher value lithium product that's not necessarily a fine chemical. The reason you don't go to create a fine chemical is because it's too capital intensive in Australia, and technically it's very, very challenging. Not an easy challenge for a miner to take on. But can we produce a 35% lithium product and then it subsequently creates a fine chemical in the destination market with a materially lower amount of waste, and a materially lower carbon footprint? The answer is yes. In which case, we should pursue it. And we are. So we're working with an R&D firm, a technology firm. They're called NickelX, a fantastic bunch of guys. They've developed a very, very clever tool to flash calcine our spodumene, and it's electrically fired instead of with fossil fuels. And that means it can be powered by renewable energy. That's the solution that's going to create a materially lower carbon footprint. We really like that option, and we think there's a lot more innovation to be delivered in the industry that's going to ultimately create a lot more value at Pilbara. Thanks for having me, ladies and gentlemen. Really appreciate it. Well done.
Ken, thanks so much. Some really interesting points that you made then too about the technology keeping up and not the changes in the last 25 years. Something else too about the EVs I was thinking about, and I don't know if any of you have thought about this. My parents recently bought their first EV, so they can actually put their hand up. But one of the benefits, as well as everything else that we've talked about as far as lessening our carbon footprint, includes the sound of the EV. So as we all get chronologically advantaged, and there are a couple of us in that age range here in the room, our hearing isn't as great as it was. My mother absolutely loves this car because she can hear everything. There's not that, that engine noise. Don't know if my dad's that keen on it, but yeah, my mum thinks it's great. So good on you. Thanks so much, Ken. That was a really interesting presentation. Some good things to think about. Now, finishing our conference today, we're going to finish off with nickel. Western Areas is our last company to take to the stage. They've got some really good market credentials. They explore, they build, they mine. Their focus is firmly on nickel for the future. Would you please welcome to close New World Metals for 2021, no pressure, the MD for Western Area, Dan Lockness.
Thanks, and just a warning, the bar's not open. 15 minutes, maybe 20, because I don't know what I can do in 15 minutes. But look, I think Ken actually spoke more about nickel than lithium, so thanks, Ken. The cathode nickel batteries are the new, as you know, the main driver for the EVs. And by the way, I'm not sure if it's mentioned today, today is World EV Day. So apparently at Optus Stadium, there's some really fancy electric vehicle cars heading down there to be parked, so ready for the big day tomorrow. So you can have a look at a few Porsches and a few Jags if you've got the money, which I think a few of you guys have. But yeah, so EV Day today, and what a fitting day to have this conference today. Look, I'm not going to bore you with a whole pile of corporate stuff, but I'll just flick through because it's good governance. You can always read that. I can't read it, so it's pretty hard. But fundamentally, look, at the end of the day, we mine hard rock. We have 3 mines, 2 at Forestania, 1 at Cosmos, and safety. During the week, we had a fatality at crossed in with Oz Minerals there at Burncut. So it's sad that that we've lost one of our friends in the mining industry to an incident this week. So I hope his family and everybody's safe. Look, I'm not here to sell shares today. So look, we are low cash cost. We've got very high grades. We've got great projects, no debt. We're cash at bank, and we've got very strong interests in somebody else, which is not presenting, but Panoramic Resources. You'll hear this, and I think that this is now embedded in every resource company throughout the world. There are now investors that are moving away if you can't show these credentials. So the next generation mine, as was just mentioned with Ken, we really now need to start thinking about how we can be innovative. And the Odysseus mine, which has got a very long mine life, we will implement some of those important, of course, also the land that we work on and the social governance of working with our friends. But look, it would be remiss of me not to actually talk about the nickel market because that's my job. Look, we currently have 2 contracts, and you've seen a lot of noise in the press recently about takeovers in Naront and Waialua and etc. So look, we've got 2 great contracts. We think we've actually got I'm pretty sure that we've got the best contracts. That means I get more of the LME price for my ton of nickel than anybody else does, and I'm pretty sure that's the case. But recently, we've actually come out that we're actually going to start the tender, and we actually have started that tender, and so far things are looking extremely good. I did this actually at Diggers, so now I've actually got the evidence back at the office. But it's a good time, as you've just heard. The market is actually extremely strong. In fact, nickel today at about 12:05, I wasn't really watching, but it went over $20,000 a ton. So that's over $9 a pound if you're in the old pound school. It's a great market. What we're seeing is nothing different. The same people are buying lithium. They need to buy the cathode precursors, graphites, and the rest of it. But what's moving, though, is we're starting to see the OEMs, who are the Teslas, the Toyotas, coming into the market. And we've been waiting for this, and I think I've talked about this for like 2 years. This has been really slow in the world of nickel, but it is now starting. So that's now really encouraging. And as previous speakers have told you, you've got to tap into that market. And we actually have a product, and we're mining. We've got a great project that's going to grow the company. So obviously, we wanted to tap into that market to get more money back for our shareholders. The two countries, we know China's established, CATL, BYD, Tsingshan. They are there. They're currently feeding probably most of the Asian market. That means the Koreans and the Japanese, who don't actually have a nickel smelter, which is rather bizarre. But they are both moving very fast to close down, I guess, the dependency on toll treating down in China. So we are now getting a lot of inbound inquiries about building new plants up in Asia, preferably hydrometallurgical, and preferably with new energy or renewable energy, sort of hydropower. So that's happening, and that's currently on the table right now, and we're in this sort of having conversations around that. And I think that what's going to happen, though, is like the BHP Tesla deal, and of course the fight for the Noront project, which is about 10 years away from actually production, is that OEMs don't understand short-term contracts. What they talk about is life of mine contracts, and that's different to how we deal today. Smelter terms on nickel, historically, and I've been in the market for 20 years, are generally 3 to 4. The longest one I've got is Nova contract, 5 years, the IGO Nova contract to BHP, which is really the life of mine. It's very rare that we have those because we like to have spot markets. But, we will have to basically not sell our souls, but do a good, strong deal, because how can you look forward 10 years what the price of the commodity will be? Well, I guess if in the world of nickel, it's been pretty low. So looking forward, it should be looking very positive. So we'll see those changes coming through. And of course, the last point there is that, I can't remember before the last time I saw big majors was Xstrata Jubilee deal, $3.3 billion. And then the Norilsk Lion Ore deal, which was sort of $6.77 billion. Those were back when nickel was $50,000 a ton. So seeing what's going on at Noront up in Canada between the a local group and of course a Melbourne group is quite amazing, that they're in a bidding war for a mine that's got a 10-year before we get into production. Look, I won't dwell on this too long, but I think the point I'm trying to make here is that we've actually got Odysseus coming online, pretty much is where things, and look, we're actually ahead of the game at the moment in terms of e-world. As Ken said, the pandemic has actually been strangely, actually very positive for the green energy world, and actually boosted sales of, through incentives and everything. But it's just actually, people were telling me not so long ago, that graph is bullshit. You'll never get there, Dan. But actually, we were actually ahead of that game. And this graph really is just showing us the split between different battery technologies. And the one that I love, I know that lithium LFPs, which is lithium phosphate, is a heavy-duty battery for heavy sort of vehicles. If you want to get high energy, quick recharge, the best one is the NCM or the NCAs, which is 811s, which is what Panasonic and Tesla is probably on a 622, but they will be stepping up. 8 parts nickel, 1 part cobalt, and 1 part manganese. What a beautiful battery, 8 parts. That means in one vehicle, there's around about 35 to 40 kilograms of nickel in every electric vehicle that comes out of the plant. It's great news. And just to reinforce, look, as I said, there's some big players. CATL, we've got CATL, China, LG Energy Solutions. I've got a few fridges and a few TVs from LG Energy, so they owe me a favor. So they're very big in Korea, and of course the big Japanese, the Panasonics. And then we've got all these not so small, they're still quite big, but they're growing. So the demand for the product, which I'm sure you've heard all day today, is just growing. And we will see that with this new technology coming in, everybody wanting lighter batteries. The main drive at the moment, though, is to reduce the cost of putting a battery into a car, but also the control computer. Now, Tesla, I haven't got one, but I think I'm going to have to get one. Is actually the control computer is one of the most expensive parts of the car. And of course, if you've got all the flow of the car under your butt is actually a battery, batteries get hot. Try your iPhone. When it's trying to find a signal, it gets really hot. So the computer needs to control the distribution of the batteries. Not all of them fire at all the same time. So that's the cost that we need to bring down to allow the internal combustion engine price to be matched by the EVs. And then everything, all the bets are off. But look, I have to talk about our growth. We've got great projects. Odysseus is in build. Flying Fox is in the twilight years, which has been now 16 years. We started as a 5-year-old, and now it's 16 years old. So a great operation, but Spotted is still going strong, and we've got some new projects, New Morning, etc., up at Forestania, and Odysseus being built, and Mount Good coming up now into our plans. We've never done one of these for a long time, but that's a 10-year production plan of producing nickel into the future. I chopped it at 10 years because people start get excited after 10. But this is just reserves. There's no inferred blue sky. This is just on current reserves on our books. There's a beautiful picture. Some of us can remember the old Jubilee pit, 9% nickel, the highest grade nickel mine in the world next to Silver Swan, both in West Australia. But we are now using all of that infrastructure, which we bought from Xstrata for a good price of 25 million. And I remember Jubilee was sold to Xstrata for 3.3 billion. So I think that's a bargain. Just to show where we are, we're on the great belt there between Mount Keith and Leinster. So you've got Yakabindi, you've got Cliffs Mine, and there's Cosmos. Total resource around about 18 million tons historically at over 2.6%. So this is the new mine, Odysseus, and we're quite happy. We bought this back in 2015. It's got over 10-year mine life. It's got 164,000 tons of nickel in reserve. And, it's low cost, big mining, and we're going to be using a shaft haulage system to bring the ore up. We are now, the green is basically rehabilitated and full phase development now down to here. We're about several weeks away from first ore, and we're going to be starting a drill cuddy here to drill into these high-grade pods. That pod there, the best intersection was 22% nickel. Now, even some of the explorers and my friends and my peers, they talk about 9, 10%, but I've yet to see 22%. I think Peter Harrell probably will have a beer with me later on and tell me, Dan, no, we've actually got good grades of Poseidon as well, and he does. And then just on that one, this is the Mount Good. That's the high grade, I call it Elephant Head, but that's only the high grade portion of 51 million tons at 0.6. And if you can cast your mind back, that actually was called Anomaly 1 back in the days with Kerry. And we are going to, once we've got the M6, we're mining here, we'll bring this online around about FY27. We're starting to unravel the M5, and then we've just done a scoping study on that, which is the Mount Good, and there's our shaft. We are currently at 92% complete on the back reaming, which is a 5.7, and that will actually go into a hoisting shaft. We've got the head frame, that's actually at Impala, the winder, new pump stations. All the equipment came through Henderson at the end of the year, and that shaft plus that winder cost us $5 million Australian. And if you were to buy the winder today, which is a 4.5 megawatt winder, you'd be talking probably double that just for the winder. So all the head frame, all the materials are there, and we're currently now building it. There's the winder house being built. We'll put the winder in there. There's the crane, and that looks like a box cut, but it's actually misleading because actually that's actually where the raised bore back reaming is going to come up. Once we've got that hole back into the sub brace, we'll then build the concrete, which will be the bottom of the sort of head frame, and that whole box cut will be basically backfilled. I won't go through the details, but from energy consumption and carbon emissions, it's a no-brainer. I would need to mine 900 or 1.1 million tons of ore and waste, which is about 1.4 million tons per annum. To bring up with trucks, I'd need probably 10 55-ton diesel trucks. And if you think you can get an electric truck to do that, well, I think they're a bit far away yet. You can get electric trucks, no problem. And we will use them as shuttle trucks to feed the crusher at the bottom of the mine. But this is basically, with the mine life over 10 years, this was a no-brainer, and it'll help us with ventilation, cooling, mining cost. Hoisting is single-digit Australian per ton. Trucking will be about $30 a ton. We've got opportunities which we're doing working and drilling now, which is New Morning at Forestania. So that's probably the next operation that's going to be coming at Forestania to replace Flying Fox. We're doing bi-heap leaching of the mill scats, and that's the first product is gone into the precipitation circuit. So we're really now cranking up some innovation using bacterial leaching to actually produce nickel from very low-grade sources. So we run a laboratory in Perth, and we do actually do work for other companies if they think that bacterial leaching is amenable. So we've got a couple of projects on hand there. But this is a great project. There's 280,000 tons of mill scats grading 1.5% nickel. And I'll finish off. We've got some great joint ventures. We've recently signed up with Metal Hawk, West Australian, near our back door. Great projects. We've got a great Western Gawler project. We've got a JV with St. George, and of course we own 100% of Cosmos, and we own 100% of Forestania, and we have a great JV with Aluka over in Western Gawler, and we've had some interesting, not commercial or economic grades, but the first discovery of copper and nickel sulfides in that area. Sand cover, awkward drilling, so we've got a great drilling crew over there, but you know, early days yet, so we've really got to tease through a lot of geophysics and a lot of drilling, because that is actually green fields, over 10,000 square kilometers of tenements. Forestania's got a lot of nickel and will always be a part of our exploration sort of portfolio. That's where we started buying the tenements from Outokumpu back in 1999. So we've been around over 21 years now. And then of Cosmos, I can tell you now, just that long section has got 500,000 tons of nickel in resource. So if an OEM came knocking on my door tomorrow and said, Dan, I want 10, 15-year mine life, and I want 25,000, 30,000 tons, well, I can offer him 20, and he'll have to go and speak to Panoramic and the other guys, because as Ken said, the volume of product that people are looking for today is just huge. And they don't really understand. They think we can just go and dig it up out of the ground. And remember, the Indonesian laterites will really grow with stainless steel production, because stainless steel is still 70% of the nickel world market. And that's growing with all the renewables, all the, you know, the big power generators. So that plus the EV growth, it's a great story. So that's why we are in nickel. Thank you very much.
All good stories, Dan. Can you just remind me how much nickel is in an EV car? How much was it?
So it's depending on the size of the car, so between 35 and 40 kilograms.
Kilos.
Yeah.
Jesus.
Yeah, well, the battery is 811, so it's 8 parts nickel, and then some other thing called cobalt, which we also have a part of a byproduct. And that's why we're excited, because the new technology, what do you want? That's why West Australians don't like EVs, because how do you drive to Esperance? Where do you charge? So they want quick charge, and then being able to sit there, have a cup of coffee at McDonald's while the car's charging, and not waiting 3 days for the thing, and then get 800 kilometers out of it.
I tell you, I work for a travel program. And if Stewie, you're in the room, no wonder you're in tethered Goda pretty happy, mate, with that amount of kilos of nickel. But I work for a TV program called Destination WA, and we went up to Wooroloo Station recently, and on the way we passed a Tesla, and it happened to park overnight at Kalbarri, and we stopped at Kalbarri as well. But I saw this beautiful Tesla at the front of this grungy little flat with an extension cord out, plugged into the car out the front.
Couldn't watch TV for the night.
Plugging the thing. Dan, thanks so much. Thanks for wrapping us up today. Would you put your hands together for Dan, everyone? And that team is New World Metals for 2021. As Keith Coughlin from European Metals said, the party is just getting started. The metals are in deficit. The demand is high. It's going to continue to take a demand on the share price. So take what you heard today. Take what you heard yesterday. We've had 52 presentations. Analyse it. Do with it as you will. There's plenty more where that came from. Make sure you keep an eye on our Vertical Events website, and we'll keep you up to date with what is coming up next as far as investment potential goes. In the meantime, you've earned yourself a drink. Come on out and enjoy it with us. Thank you so much, everyone.
Monday morning.